Hello and welcome to The Big Picture. I'm Tina Jha. Lok Sabha on Monday passed the General Insurance Business Nationalisation Amendment Bill 2021. The bill seeks to amend the General Insurance Business Nationalisation Act of 1972. Now, this act was enacted to nationalise all private companies undertaking general insurance business in India. The 2021 Amendment Bill seeks to provide for a greater private sector participation in the public sector insurance companies, which were regulated under the 1972 Act. Also, the Act requires that shareholding of the central government in the specified insurers must be at least 51%. The Amendment Bill removes this provision in the Act. Besides, there are certain other amendments as well related to change in the definition of general insurance business, the transfer of control from the government, and also the liabilities of directors, all of which we will be discussing on this edition of The Big Picture today with two distinguished panelists. So let me first introduce them to you. I'm joined on the program today by Mr. Kapil Mehta. He's co-founder, Secure Now Insurance Broker Private Limited, and Mr. Siddharth. He is National Economic Editor of the Times of India. Thank you, gentlemen, for joining me on The Big Picture today. Mr. Siddharth, let me begin the program today with you. Let's try and first understand the main features of this amendment bill that was passed in the Lok Sabha yesterday.
Yeah, so basically there are four amendments that have been proposed and you touched upon them. One is to reduce this minimum shareholding criteria of 51%. The government under the law was required to hold at least 51% in a general insurance company, in the 5 general insurance companies which were governed by the law, which was General Insurance Corporation, New India Assurance, Oriental Insurance, National Insurance, and United India Insurance. So that floor has been done away with. So the government can, at any point of time when it decides, completely exit one of these 5 companies. The other thing that has been done is that it won't apply to entities in which the government gives up control, and so the government has to give up control for in whichever entity it wants to. So basically, it has been done to privatize one of the 4 general insurance companies, being GIC out of this. So, and as you know, the privatization of one of the insurance companies, general insurance companies, was announced in the budget. So this is a follow-up to that, and the legislative part is being tackled through this bill. And once the legislation is in place, the government will then take the next step to privatize one of the general insurance companies.
Okay, and how different is it from the 1972 Act, Mr. Siddharth? So if we try and put into perspective, one is, of course, the shareholding of the government in these public sector insurance companies. But largely, what are the kind of implications that it will have in the times to come if the bill is passed in the Rajya Sabha as well?
So what the law had done was nationalize general insurance business. So which means companies which were privatized were taken over by, which were private then, were taken over by the government. Now, so this completely reverses the entire thing. So whichever company the government now decides to exit, it can now exit. So that is what is sought to be done.
Okay, so what are the concerns of the parties and the possible implications that it could have? I'll come back and discuss these aspects later on. Let me get Mr. Mehta's perspective on this amendment bill that was tabled and passed in the Lok Sabha on Monday. Mr. Mehta, what's your opinion on this amendment bill, which seeks to make certain amendments in the 1972 Act?
Tina, thank you for the question. I'm actually very positive about these changes. And if I were to give you a little background, it's because when you look at the public sector general insurers, they have some very notable strengths. For example, people trust them. They've been around for years. They have a good brand, and they have a reach in terms of tier 2, tier 3, smaller places, which is unparalleled. But they also have some slightly weak areas, one of which is the ability to underwrite risk with the right pricing. So when you look at the economics of these insurance companies, there are 2 sources of profit. One is investment income and the second is underwriting income. and most of the public sector insurers have underwriting losses. That's a technical skill and that's a technical capability. And I think that is with privatization, that's one of the aspects of public sector companies which will improve. The other, of course, is technology, which during the pandemic has become even more marked because using digital ways to sell commercial insurances or individual insurances becomes so much more important. I think if you think of the combination of building on the strengths that the public sector companies have, which I mentioned, and addressing these slightly weak areas, it's really an excellent move. And I hope this experiment with one general insurer works well, so the government can then think about it, in smaller ways in the future as well.
Absolutely. It can reap benefits of the advantages that it takes from one of the companies that it decides to pair its stakes. Mr. Siddharth, but there are several concerns. You've spoken about the benefits of privatization, but what the opposition parties are now, the kind of charges that they are making is, they say that privatizing decades-old institutions will lead to concentration into just a handful of capitalists. Now, obviously, this is one charge which is made from the opposition's perspective, but is there any merit in the charges that are being made? And are there any kind of checks and balances that the bill talks about to ensure that this concentration does not happen?
So if we go back in time, financial sector has been a protected area in that sense. So if you look at the earlier experiments with privatization, to begin with, it was never called privatization. So, it was always called disinvestment, strategic sale,
Yes.
as opposed to calling it privatization. So, it's a very, very old decision to just call it privatization, which is something that the budget did this time. So, if you look at the financial sector, it was never on the radar of disinvestment or privatization. What was originally proposed was to, list some of the entities, and that is what the process was. Banks were listed, not all general insurance companies were listed, and LIC is still in the process of getting listed. So from that mindset, we have moved to a completely different era, if we could call it, where the government has said that it is willing to privatize some of the general insurance companies, which means it is willing to exit some of these general insurance companies. And for the moment, it has said that it will privatize one insurance company. Privatization, by its very definition, means that government will not be a majority shareholder.
Yes.
Whether it will hold 26% or not, that is something that is yet to be publicly stated. But by the looks of it, it is willing to give up 100% of its stake. Now, to come back to your question of these protests, well, it is not as if the government is exiting all the 4 general insurance companies. New India is the largest, and it also depends on which company it exits. So whenever you privatize a company, there are bound to be allegations of selling out to capitalists or giving up this control. But frankly, the government has defined what are strategic areas where it is not going to allow private sector, and by that definition, this is an area where private sector is already allowed, in the sense that you have general insurance companies in the private sector space which have been doing business in India for the last 2 decades now, and they have. It is not as if the public sector has been wiped out. Now, what the next step is in terms of the privatization landscape for general insurance is not very clear. For the moment, only one insurance company is to be sold, and so from the looks of it, it will not exit GIC, which is the Indian reinsurer, and so one of the 4 other general insurance companies would be put on the block, and that does not materially alter the landscape, although it does allow one more large investor to come into the general insurance space.
Certainly. Okay. Mr. Mehta, so over the past few months, we've seen certain reforms coming into the insurance sector. There's been increased FDI as well, which has been allowed. And now this, which is going to, of course, with increased greater private participation, there is going to be a lot of scope. There are going to be increased resources. As you pointed out, there's going to be better access to technology. All of this is going to obviously enable faster growth of this sector as well. But is there anything more which is required to enhance insurance penetration in the country? If there are any existing challenges that we could talk about?
Tina, one of the most, the way general insurance works, it's a very capital intensive business. Maybe not as capital intensive as life insurance, but definitely requires a lot of money. And if you want to increase the penetration, you want to go to smaller towns, different segments, you need to put a lot of money into building the infrastructure. Sometimes the infrastructure is physical, like a branch. Sometimes it is digital, like we spoke about, or there may be other partnerships and collaborations you do. The fact is, this money has to come in to increase penetration, and there are just two sources of this money coming in. Either the public funds it. So when a general insurer is making underwriting losses, or economically not very sound, you have to have a minimum solvency margin that can come from taxpayers' money, or you can fund it through privatization, external funds, where you sort of get the economics right. The end result is that the insurance company gets money through which they will actually become stable and they will expand. So I actually see the privatization as not just a way of getting getting a return for the government, but it's also a step for the at least one of the public sector insurers to step up and sort of increase this penetration. And they have all the right ingredients to do it, because as you go to smaller places, people trust these the PSUs that Siddharth mentioned, the four of them. They're very well trusted names.
Absolutely. But, one of the challenges that I think, speaking from the common man's perspective, is the trust in the public sector is more. Even if the private players are doing very, very well, they are providing better insurance at a lesser premium. But, Mr. Siddharth, the trust factor, the credibility of, not shutting down anytime in the longer run, reaping maximum benefits, that trust of the common people still lies in the public sector companies. So how is that going to change?
I think it's a mindset issue. It is not as if the general insurers have a sovereign guarantee or anything that that give it that government shield that it won't go down. It's just that if it is going down, the government will probably step in and bail it out. That is the expectation. Yeah. Having said that, insurance, like almost all parts of the financial sector, is a very well-regulated sector, where the regulator keeps very, very close tabs on whether its regulations are being followed or not, whether its capital norms are being adhered to or not. And whenever there is a red flag that appears, the regulators steps in. Just like banking, where RBI doesn't let banks collapse because of the systemic risks associated with the collapse of a bank, even a smaller one. The insurance regulator also has been proactive in ensuring that whenever there's a red flag, it steps in and does its bit to ensure that policy holders, who are the most important stakeholders according to the regulators, are not adversely impacted. So I think it's a mindset issue where where people have a greater faith or trust in terms of the public sector, but in terms of service, the private sector is better, if not at par with the public sector. And there are many more product innovations that have happened in the private sector than in the public sector. You have data on claim settlement, which is there, and you can see that it's not as if they reject half the claims or anything like that. So I think it's a mindset issue, which I guess over a period of time it will change.
Okay, Mr. Mehta. So,
can I just add a?
Sure. Yeah.
I just wanted. I think I'm just building on what Siddharth said. If you look at life insurance, LIC has 70% market share, and 30% is roughly split between the private sector insurers. When you look at the general insurance industry, all the public sector insurers, and they are all four of them put together, maybe have about half the market, and half the market is private sector, roughly. Now, that itself tells you that on the general insurance side, the private sector has been able to build a reputation. And in fact, if you look at the top 3 or 4 insurers, you will find a private sector insurer on the general insurance side. So I think they're making quick inroads into building their own trust and capability, much more than in other segments of life insurance. I just sort of wanted to make that point.
Okay, and also your perspective on changing also the mindset, because if there is going to be increased role of the private sector in this, there's going to be enhanced private participation, this mindset will need to change. How will we do that? Because despite innovative products that Mr. Siddharth pointed out, better services, the mindset still lies with the trust in the public sector.
Yeah, the market has 2 very different components. The general insurance is a huge market. About 40, about half of it is individual insurances that you and I buy, motor insurance, individual health insurance, and half of it is commercial insurances, which companies are buying. On the company side of the business, the sort of origin of the insurance company is not that important, because what they do is they look at the terms and conditions, the risk covered, the cost, and the company is important, but it's a secondary decision after they've looked at the sort of overall product features. I don't see an issue there at all, whether it is private or public sector. On the individual side, yes, you're absolutely right. There's a great deal of trust that the public sector enjoys. And I think the private sector, the companies that exist in the country and any new ones that may come in, will have to spend and invest into building a brand. And it's not something they can do overnight, because many of the general insurers have been around for decades. So it will take them 5, 10, 15 years. But if they want to build a viable big business and serve the country properly, then the private sector insurers don't have an option. And all of them recognize that India is one of the most attractive and the key market for them to enter in, and they have a long-term orientation. So I think you will see over the next 5, 10 years, private sector stepping up its role, particularly on the general insurance side.
Okay. Mr. Siddharth, so one of the provisions in the amendment bill also speaks about the liabilities of the directors. What is that, if you could help us and our viewers understand?
Yeah, so basically it says that, the liability will be, limited to the decisions that are taken by the directors. So what it says is that, basically, if you are not a whole-time director, which means if you are an independent director or or one of these government-nominated directors, then you will be held liable only for certain acts. And these would include acts which are committed with your knowledge and attributable to the board process. And, and where the director has not acted diligently. So it is in a way a shield, if you can call it, making the director liable for all sorts of irregularities of problems, whatever arise. So that is how I look at it.
Okay, and is there any clarity, although the bill has been passed on Lok Sabha, there's no clarity on which companies, the state-owned insurers that the government plans to pare its stake in? Since you are closely following the story, Mr. Siddharth, do you have any lead on which is the company which is going to first get into this, or is it going to be impacted by this move?
As we had reported in the Times of India, it is unlikely to be GIC or New India, which is the listed entity. So it will be one of the 3 entities, which is either Oriental, National, or United India, which would be taken up for privatization. As the process is, Niti Aayog recommends the name of the company that is to be privatized, which it has done. And then there is a committee of officers which goes through it, weighs the pros and cons, and then recommends it to a panel of ministers, which takes a call, and then it has to be endorsed by the cabinet. So it's a process that will take some time, and the government, through the Department of Investment and Public Asset Management, which is DPAM, will in the meantime run the process to appoint the advisors and do the other process, and then bids will be called to for expression of interest in the subsequent process. So it is not as if it is going to happen immediately. In fact, it may spill over into the next financial year. So it may not happen this year at all, because the process is a time-consuming process, as you have seen in case of the other public sector companies such as Air India or BPCL, where a decision to privatize was taken more than a year ago, but the process is still on.
Okay, Mr. Mehta, one comment from you on now the bill has been passed. Both of you on the panel are saying that it is going to help in more ways than one. If we talk about generating of resources, obviously it's going to be huge with this move. But how is it going to help the public sector, if we specifically talk about, to design innovative products which are at par with the private sector?
I think, Tina, there are lots and lots of products which are there, which the public sector can sort of build on, and that will happen with some privatization. For example, when you think about health insurance, what's been happening over the past, individual health insurance, what's been happening over the past 4-5 years is that the amount of sum assured has been steadily increasing. So whereas earlier 3-4 lakhs of insurance was good enough, it's now not uncommon to have 30, 40, 50 lakhs, a crore of health insurance, particularly in the cities or with vulnerable people. So I think you'll see the public sector also being open to such products, new structures. There are many innovations which companies are talking about, how you cover the homes, how you cover individuals, what critical illnesses do you cover. You'll see a lot of those coming in, and at one level, you'll see the public sector match what's happening on with the private sectors today. But another level, what I would want to see is that these public sectors really leverage their platforms to go well beyond what is available today. For example, overseas we have a product on healthcare, which is called a long-term care. It's there in some developed markets. I can see some of the public sectors introducing that in some way because it fits in also with the goals of the public sector companies. So I think there's going to be a lot of innovation coming ahead.
Okay, let me take one final question from you, Mr. Siddharth. So this move is also being seen as one step towards helping the government meet its divestment target of 1.75 lakh crore rupees for this particular year. What are the other plans that the government has towards achieving this target?
Well, I think the biggest will be the Life Insurance Corporation IPO. Depending on how much the government finally decides to sell, but that will be a huge revenue generator. Then there is BPCL, which is moving towards privatization, Bharat Petroleum. So that will be another large, disinvestment proposal. Then you have Shipping Corporation of India, Concor, which is still not, moved into the final leg. And maybe this insurance company, whichever the government decides to privatize, although it won't be of the same scale as BPCL or anyone. And then there are two banks which the government intends to privatize, but the law is yet to be amended, which will require a similar amendment like the one that has been done for the general insurance companies. But by all accounts, the bank privatization will spill over into the next financial year because it doesn't look like that the government will be able to introduce the bill in this session of Parliament. So there is quite a bit of, quite a few companies in the pipeline. Plus, there are some public offers and the other sources of fundraising that the government includes in this whole disinvestment proceeds that it has.
Okay, so there are several plans in the pipeline, but of course, as Mr. Siddharth was pointing out, the procedure is long. There have been some stumbling blocks, and of course, the COVID pandemic has been one of the biggest blows to this government's plan of achieving the target, the divestment target of 1.75 lakh crore rupees for this particular year. With that, I'll have to call it a wrap on this edition of The Big Picture. Thank you once again to both my guests for joining me on the program and putting things into perspective on this very, very important bill, which the Lok Sabha passed on Monday. Thank you very much and see you again same time tomorrow.